Welcome to Markets Now. I'm Michelle Rook with Scott Varilek with Kooima Kooima Varilek, and we're seeing some pressure in the grains, but livestock futures after kind of a mixed opening have pushed back to the plus side. And Scott, it has been a record and historic week here for not only the cattle on the futures side, but also on the cash trade that we're hearing today.
Yeah, thanks for having me. And it's been a fun week for the cattle producers, cattle traders. Finally, these high cash prices, fundamentals kind of woke up the futures market. In my opinion, they're staying high and climbing. So, quite a swift rally here to get above $2. It didn't really spend much time thinking if it needed to go above or not. But we've got high cash happening again this morning. There was the thought maybe the Packers will wait till after the cattle on feed report, but that's not the case. We've got all of the majors started bidding some 208 this morning, and it has already jumped to 210. So that is fluid and is going to keep changing as you see this, but just know that cash is higher. The South gave up early this week, some 201, 202. I don't know what that was about, but the North is holding strong. We know we have the leverage. Numbers are tight. And that's what we're seeing. So 210, we're kind of celebrating, having another good day here. Futures are reacting that way as well.
No doubt. Let's talk about the futures because, like you said, these are all-time highs in both live and feeder cattle futures in the front end of the board. Where do we project to now? Where do you think?
Yeah, it's you get into this new territory and everybody's trying to find lines. Everybody wants to know what that high is. Everybody wants to sell the high, but just know that there might be one guy that's going to get that done. It's probably not going to be you, whoever I'm pointing to, whoever I'm talking to. It won't be me either. So we're all grabbing straws, trying to reach for what it's going to be. But in the moment right now, we've got a very positive basis. The cash leading the market here. We've got bull spreads working. The market's higher. So with that basis and everything, we've got all signs still pointing that we are uptrending in this market here, and where it stops, nobody knows. The hard part is it's how do you be protected at these levels? We know what risk we have. Anybody that's got a short on is on margin call likely or real close to it. So having to make some tough decisions and trying to hold positions and seeing how high it can go. But at least there's some opportunities out there now that we've got all the markets in 190 and above. We can maybe sensibly look at some stuff. So to kind of flip your question into some market advice, but for me, looks like we can keep charging higher. The trend is up. Usually for me, by the middle of February is kind of a seasonal for me. Get right in our bull sale time. That's always when I'm starting to look at where I'm at, what kind of protection I can put on. So we're getting close to that, that spring rally kind of talk. And usually it's the middle of March when you have your cash high as well. So we're getting to an area where I got to start thinking about, hey, how can I protect this? But as of now, as far how high we can go, everybody's going to start picking numbers, and I'm not sure what it is, but
I know. And good advice in terms of the risk management. But if you're saying we're having some 210 cash trade, we are seeing the futures at a discount to that. So maybe we have to chase that here for a while. Where would we be, Scott, right now if we didn't have these heavier weights? They're kind of still an albatross on this market.
That is the one, major head scratcher that you wonder, I mean, the weights have been so far above year ago levels, and we've had excellent weather. I don't really remember a winter this brown, just no moisture, and it's cold, but it's been absolutely good feeding weather all the way through. We've had, for the most part, cheap feed as well, but the numbers were that tight. We had been screaming about tight numbers since before COVID, so they just got tighter and tighter, and it took too long for this market to hit that part of the cattle cycle to where we kind of got in that danger zone of having too tight of numbers. So how high we could have went, without these weights, it'd be pretty amazing. But when you think back to that COVID, the Packer could have been paying this price, 202, 210, whatever it is, and still been making money. So we feel like we're just getting to that level here now, to where there's still some, there were still some Packer margins, some retail margins in there, and we're at these levels. The weight is helping them out. They want to make sure it's on. But the producer side, wanting to pull them ahead. They're wanting a piece of this action. They want to sell for 210. They're gonna start taking that, and there's a threat that we could get current. It really could happen. You have corn and trying to rally a little bit here. It's higher than it was, so we're getting pretty used to the large carcass weights. So the only risk for me is that they start going down. That could be the thing, because we could have been, having a lot higher prices if we wouldn't have had all the extra weight for them.
Yeah. The feeders have also been exploding into new highs, chasing not only the cash index, but it seems like we have news that maybe the Mexican border is not open to feeder cattle from that area.
Yeah, we do. That was going to be a slow start and rocky ground, and what that all looks like for them to get cattle across the border. And yeah, if there's some more issues to slow that down, that just adds to the fire that we have here. And we've got these northern runs happening, and they are on fire. Prices are very high and just keep climbing. It's very hard to know what to do. So we've got a lot of these, feedlots trying to figure out how we're going to re-own. If you're going to take this 210, how do I buy something back? And that could be part of the reason we've got some of that weight, because there hasn't been an opportunity to buy something back that breaks any better than definitely than what you have on feed. So there's a few empty pens starting to show up around, and guys are starting to wonder, how do I do this? How do I get started? And it's been a challenge. I think it's going to stay that way as we all fight over these numbers, because we get to the end of January here. We've got some of these big quality northern cattle are already moving. They're already gone. So the pickings are going to start to get slimmer as we go into spring. So that's just going to add to some of the upward trend here.
Okay. A couple issues we haven't talked about. Cattle on feed report out today. And the other question is, when does consumer demand finally falter? Because as long as consumers are paying these prices, we should be able to keep the cash trade strong, right?
Yeah. A couple of reports coming up here. Cattle on feed today, cattle inventory next Friday. With a 100% placement number, I think that's at risk here a little bit here. That seems pretty lofty. I would have thought, with the South being so far down on placements, that I thought that would weigh a little more. So we'll see. Might add to the volatility, but with cash being in charge, maybe we don't have to worry about it as much. But we're going to see big moves either way with the market that's trading this strong. Cattle inventory next week, I think that's the one I'm looking forward to more, I guess, as a fundamental cattle kind of trader. We didn't have a July report, so it's that much more lapse of time that we have not seen some of those numbers and what the cow herd has done. So expecting some of these deferred cattle markets to move up or down with some of the other markets, as they're a little bit uncertain on the future. How long can we stay at these prices here? Would be how I would look at that. The consumer demand, I think that we're pretty used to prices on everything moving higher, and the beef really hasn't taken that big jump higher. Yes, it's a little higher, but some of these cuts are actually priced lower than they were a year ago. We know the retailer had such a huge chunk of margin in there, and I think that they've had to eat into some of that. So I think just now we're getting to the point to where some of these beef prices for the consumers are going to start going higher. So I don't think it's been much of a factor yet, in my opinion, but I think it's probably something we will start to look at now, as now these cuts are starting to move higher by the week, and we'll see if there's any major backlash. We're coming, I guess it's still only the end of January. I want to talk about grilling season, but not quite there yet. But I think demand has been good and should be okay yet here for a while.
Hogs back up this morning, and it feels to me like hogs have been kind of following the cattle market, but we had strong exports this morning, and I feel like we've been handling these tariff fears with Mexico on the plate here pretty well.
Yeah, good export number this morning, so we can look at that and say, okay, that's step one. But the things we've been looking at, number one, yes, the tariffs. That's certainly there, holding some decent prices. Maybe worried about it, trading a little bit more sideways than I thought. I think they have some room for higher. The producers are really waving the disease flag pretty hard and feeling like this spring we could have some tighter numbers, and that there's going to be a some better prices to come there, and that's all true. But I feel like that we're getting held back by the possible tariffs that could happen, and there's a lot to debate about what these tariffs are going to do, how much is going to happen. Where any market that lives on the exports is going to be a little bit of a headline trader here coming up. One day up, next day down, as we try to decide what some of this uncertainty is.
No doubt. Okay. And we had new highs for the move in corn and soybeans yesterday. Is this just profit taking this little setback today, or is this about Argentina lowering their export tax?
I think it's going to be led by the Argentina leading their getting rid of their export tax here for lowering it here. And I think that the funds are long this corn, they're long the beans, but some of that uncertainty is always a little bit negative. So it's probably, yes, profit taking off of some of that news, but we've got markets that have tighter ending stock numbers. We're feeling okay. We had good exports this morning on the grains as well. And, Trump is here. We've talked about tariffs. So what we're planning on is tariffs. That's the thing. So anytime we see that, maybe I'm going to trade this a little softer, the other countries already know what's possible and what the tariffs can do. So we might come to some agreements a little bit quicker. It does have that little bit of a better feel to it than the last time Trump was in. And maybe that's why we can hold some of these decent prices here. And anytime we get a deal done quicker than expected, I think that we can move a little bit higher.
Yeah, and I think the weather maybe looks just a tad better in parts of South America. That might be adding a little pressure as well. All right. Thanks so much for joining us. Scott Varilek with Kooima Kooima Varilek. That's Markets Now.